Welcome to Bitcoin and Me, Jason Deane. Good to have you.
Great to be here, Gary. We finally managed to make it work.
Yeah, indeed. So for anyone that doesn't know, Jason is the co-CEO of Renewablox, which we're going to find out quite a bit more about, hopefully, on the duration of this podcast. Maybe just give us a sort of minute or two of who you are and your involvement in Bitcoin.
Yeah, sure thing. So I think, like many other Bitcoiners, discovered Bitcoin quite early on and then just ignored it because you don't understand it, do you? And you do need a lot of touch points. So for me, that was 2013. I'd already been working for, quite a few years by then, large corporates, cable and wireless, Microsoft, started a couple of businesses, including, the UK's longest running chain of internet cafes and game zones. And, just saw an article about Bitcoin one day in 2013 on a train, didn't understand it, looked it up, didn't understand it then, apart from the fact it was obviously a scam from what everyone was saying online. So I didn't get involved, left it then 3 years, which was quite an expensive mistake, and finally got involved in 2016 when I researched it properly. And then, I'm sure you know this, Gary, once the moment the penny drops, or the Satoshi drops, then it's just like, wow, I need to be involved with this. So then became a voracious reader of everything that there was to do with Bitcoin, and started investing in 2016, started mining in 2017, just hobbyist mining really at that stage, and then went full time in the Bitcoin industry sort of 2018 onwards. And have been mining ever since as well. So fast forward to today, and been involved with multiple projects around the world, mining and consultancy in various different areas as well. And then Renewablox came along, and that's the project I've been working on now for quite a while, mostly under the radar, but I'm sure we'll touch on that a bit later on.
Cool. All right. Well, yeah, we'll move on to that fairly quickly. But the first question I ask all my guests is, what's your earliest memories of money as a child?
That's a really good one. Do you know what? I have to really think about that. I suppose most people say things like, getting a pound note in their card from the grandparents or something like that. And that does stick in my mind because actually we didn't have any money growing up. I mean, it was in the 70s, so no one had any money anyways, right? So I think probably something like that. I do remember fairly early on understanding that I could do things with money. So I started putting like little suggestions to my mum, say, I'll do this job for, and in those days, like it was 1p or 2p or something like that. And I think those are probably the earliest memories. I used to spend quite a bit of time just working out, which jobs I could do and how much I could charge for it. And I could generally tell by my mum's reaction whether I was in the right ballpark or not. So I would say that's probably my earliest memories. I don't know how old I was, but it was young.
Were you a spender or a saver when you were going through teenage years and stuff?
Right. Well, that's a good point. You made a good differentiation there. So definitely a saver, really quite young. So I remember I used to have goals. I used to have this chart on the wall, which of course I used to fill in every day with my little pen and ruler. And whatever I was aiming for every day that went past, it was either a straight line, hadn't got any money in. But if I got 10p for doing the job, then I'd increase it by 10p, and I'd save up for all of these things. And I was really quite good right up until I became a teenager, and then suddenly everything sort of went out the window at that point, because it was just like, well, hey, I can buy beer and do things and go crazy, and then I can get an overdraft from the bank. And then, of course, I was the last generation that went to university where we were paid to go, so no fees, you got a grant, and we were the first generation where loans came in. So we had loans and a grant. So to me, that was probably quite disastrous in retrospect. But I mean, I can say I had a very, very good time, but the financial rules were definitely gone at that stage. And then I had to relearn them later on.
It's incredible, actually, thinking back, because I was exactly the same. I got a partial grant, and as you say, you could get student loans that at that point were pretty cheap and didn't have to pay for your tuition fees. So it makes my toes curl when you see the levels of debt that students come out of university with these days. It's crippling, isn't it?
We were the lucky ones. I mean, this was in the days as well then when degrees really did make a difference. I would argue, unless you're doing something really specialist now, they probably don't have that much value. And I'm sorry to anyone who's listened to this who's at uni doing a general course, but the reality is the world has changed. So the cost now is much higher and the benefit is much lower. I don't think those points are very. I think you certainly can argue those points quite easily, but of course, the other part of this is if you want to go to university, just have fun for 4 years, but that's an expensive way of doing it.
Yeah. I mean, there's lots of great life lessons alongside what you may or may not learn in a lecture hall. But I think the other thing that's changing so much as well is with AI now, like there must be 18, 19-year-olds looking to register to go to university in September for a course that realistically in 3 years' time, the employment potential for some of those roles are going to be minimal because AI is just going to get them. Whether it will happen that quickly, who knows? But it's a very fast changing landscape in the world of employment. And it's sad, but I think the youngsters are going to bear the brunt of that pretty hard, I think.
Well, I think, yeah, that's true for a lot of people. It depends on your mindset as well, because a lot of youngsters, you think about when you're at uni, you're always looking for opportunities and people come up with crazy ideas because you hadn't had some of the restrictions of life sort of placed on you yet. There's that freedom of thought. So there was a lot of creativity, and I assume that's still there at that age with the groups of people that you hang around with. So there will be some people there who are forming friendships which may well lead to the next big companies and the next big developments. But you're right. I think at the same time, it's very tough now for a lot of those people to assess exactly what AI is going to do to the industry that they're aiming for. And I don't really know the answers, and I'm not sure anyone really knows the answers, but I think at this stage you've got to be aware and you've got to start self-preparing for what might be coming up.
Yeah, definitely. So you said that you were you started investing in Bitcoin in 2016, and then you managed to quit fiat mining and work within Bitcoin just 2 years later. Probably a lot of Bitcoiners listening to this in 2026 thinking, if there was a way I could get out of fiat mining and work in Bitcoin, but you managed to do it 8 years ago.
I did, but there is a little bit more nuance to that story, right? So it wasn't because of Bitcoin initially. I'd love to say it was, but the reality is that it wasn't. As I mentioned, I had some businesses at that point, and what I decided to do was sell them. So I sold, I mean, these were not massively high value businesses, but I did okay. And that gave me a cushion. And I remember speaking to my other half and I said, right, I'm going to move into this Bitcoin thing full time. By then she was quite aware of what was going on as well. And I said, I think this feels like the internet in the early 90s. It's got that same kind of excitement and network kind of growth about it. I think this could be big. So I'm going to take 6 months out. We can afford to do 6 months, and I'm going to find something to do in the industry. I didn't really know exactly what it was. And actually I spent the first couple of months of that writing a book called How to Explain Bitcoin to Your Mum, which surprisingly actually did quite well, even though it was my first, it was actually my second book. It did actually do reasonably well. It's still available on Amazon, but it is actually quite out of date now, but people still buy it because even though the examples are out of date, the actual concept's still valid. And that's how it started, really. And then I started writing articles, and then people start getting in touch, and it just led to other things. And of course, the industry as a whole was still quite young, particularly in the UK. So that meant you could kind of shape a bit what you wanted to do, where you wanted to contribute. So, in some ways it was quite lucky, I suppose, at that time. But bringing that up to today, I'd still say that's the same now. I mean, there's still opportunity all over the place in Bitcoin, perhaps now more than ever because of some of the new developments going on. So I would say if this is something you really want to do, get out there and do it.
Yeah. And I think it's a brave thing to do, but I guess it was nice having that backup, if you like, of that 6 month headroom to say, right, I'm going to fully go into this and commit for 6 months. Not everyone maybe has that. Well, I think some people have that potential opportunity, but maybe a bit too scared to do it. Others maybe just don't have that because either they're family situation and their current income means that they just, they can't afford to step away, let alone for 6 months. I think Bitcoin work, for want of a better phrase, is going to become probably more mainstream over time, but we're still quite a long way off that. And I think, as you say, there's a lot of onus on the individual to find a path and find an opportunity. No one's going to come knocking at your door to say, come and work for me in Bitcoin, or they're not likely to anyway.
Yeah, I think those days might be coming, but I mean, it's find the opportunity or create the opportunity. That's the other thing. I mean, don't forget, we live in a very online connected world. So there are lots of things that you can do while you're still fiat mining. So, it's all out there, but it does take time and a bit of focus and a bit of discipline to go through it all and work it out. That's for sure.
Yeah. Don't become a Bitcoin podcaster because it doesn't pay. I'll just let people know that. It's great fun, though. It's great fun.
It is great fun. And actually, I still now, I don't know how many podcasts I get through a week, but it's a lot. So the thing is, we rely on people like you just to keep producing it, because we need to have this material, particularly amount, walking on something like that, which I do most days. So I need those podcasts. So please don't stop.
Yeah, it's my only reason for starting it was just that I would get opportunities like this just to talk to people within Bitcoin that I was interested in talking to. And it's just a cover, isn't it? You can reach out to someone and say, will you come on my podcast and have a conversation? Whereas if you just said, can I phone you up? You sound a bit strange, but it's no different, really. We're only just having a conversation. It's just that I happen to be recording it and other people might listen to it, but that was the whole reason for starting. So let's move on to Renewablox then. If you had to give a elevator pitch, to use the corporate cliche, how would you describe it in 30 seconds to someone? What's the big idea of Renewablox?
Well, I guess the kind of easiest answer is we're an energy optimization company first and foremost. We just happen to use Bitcoin mining as the tool to solve very specific energy problems in the UK. And that's right from very small local level right up to grid level and basically everything in between. Whatever the client's energy problem is, there's generally a solution that we can find through our arsenal of tools. Bitcoin mining is one of them. Access to the energy markets is another one of those. Now, that was the one actually that took the time to put together, but we got there in the end.
Having listened to you on spaces and bits and pieces and done a little bit of research myself, the large focus of it, I think, is on the different elements of energy that in this country get kind of wasted when the grid can't take the energy. So the curtailed energy, where currently, again, you can probably talk about this much better than me, but there's contracts in place with the government that say, if you have a wind farm and you can't send your power to us, we'll pay you an extortionate rate to switch them off. Or there's the kind of stranded energy. So energy that gets produced, it can't be switched off, but there's nowhere for it to go on the grid or battery storage. So are they the two kind of main aspects that that Renewablox kind of help to solve?
It's two of the main, yeah. I mean, they're certainly the most famous ones. I mean, the curtailment issue is something we see, on Twitter and in the press constantly, and with good reason. We built these lovely big wind farms, and they are pretty spectacular. We spend a lot of time in Scotland, and we do see these things in operation, and they're really quite cool pieces of kit. But the trouble is we just don't have any way really of transmitting that power effectively. I mean, we do, but it's just restricted. And this is where this term thermal constraint comes from, because it literally is a case of, if you try to send that power down our existing lines, it would melt the lines. It would just get too hot, right? So I'm sure you've done this. You've plugged in like an extension lead or something, you use something probably a bit too heavy for that lead, and it gets pretty warm, right?
Yeah.
So, but that on a grid scale. And the constraints issues and the curtailment issue is quite an interesting one, because the headline figure that's always given is this enormous number, and that is true. So I think last year it was 1.4 billion that we spent on curtailment in total, but it's actually split between two numbers. So what is paid to the wind farms, I'm going from memory here, I think it was about 385 million last year. So that was the, we need you to turn off kind of part of it. And that still leaves £1 billion, right? So where does that go? And that is to solve the problem of the power that didn't get there. right? So if you think about this, you've got all that power in Scotland. So the grid says, oh, I've got all this power, but we can't transmit it, so you'll have to turn it off. Okay, fine. But that means we haven't got the power where we need it. So how do we get that power? And that's done through something called gas peaker plants. And these are, I don't know if you've ever seen these, they are all over the UK, but they're basically, it's a big industrial looking building with these giant gas turbines in. They just sit there on standby, just humming away. Again, we've been around and visited some of these. Very kept warm so they can fire up at a moment's notice. And when the grid needs the power, they just power up just this huge, like 2 megawatt kind of machine comes into production. And actually, even if you stand outside and look outside, you can see the heat coming from the vents from the top, because again, it's just blasted into the atmosphere in most cases. And of course, that's expensive. And that's the part that costs the real money, is replacing that power.
When you say replacing the power, then, is that when there isn't enough wind and the turbines can't produce enough? Or is it the more location issue, i.e. the energy from Scotland can't make it in time or whatever it is down to London that needs it or whatever it may be? Is it the latter?
Yes, it's more the latter. So, we've got capacity, generally speaking, in the wind farms, right? So as long as the wind's blowing, it will produce. So this is a locational issue, exactly right. So we've got, say, 50 megawatts of power that could come from the wind farms, and we need it a bit further south. But the trouble is we can't get it there. So we pay to not have that, and we pay to have the gas turbines power up to provide it. And that is simply due to grid infrastructure issues. Yeah. And to be clear, NESO, that's our energy operator, are working on this. There are big upgrades in place. They are happening. But like anything in the UK, it takes a very long time to build this stuff. So we're at least a decade away from this coming online properly, probably longer in reality. So we've got to kind of suck it up in the meantime.
There's quite a lot of, online talk about how extortionate the government contracts are, as in how much they pay to the wind farm owners that make it a non-conversation for them to discuss anything else. Is that true, or is that changing? So you must bear the brunt of that, because if you're going to a wind farm and saying, we've got an alternative for you, surely they say, well, unless you're going to pay me at least what the government pay me, I'm not interested.
Yeah, you're absolutely. I mean, we can't go to those guys because they'll just laugh us down the road. I mean, they really will. And to be honest, they're not interested. I mean, they've got a good contract. They'll be paid to produce, they'll be paid not to produce, right? So the way that we get access to the energy that's up there is actually directly through NESO. Those guys effectively manage the markets that sit around all the energy production and consumption in the UK. So they have acknowledged that this problem exists. They know that they don't really want to be paying for power that we could be using. And they actually commissioned a couple of reports actually, a year or so ago. I think it was Arup who produced it in the end, or it might have been KPMG. I can't remember off the top of my head, so don't quote me. It's one of them. They got them to have a look at it and say, right, what if we didn't actually pay them to turn the power off? Right, we just took the power anyway because we're paying for it, so we might as well have it, right? So what if we instead had a way of absorbing that power in Scotland? And this is in Scotland, right? It's above something called the B6 border, which is, there's a big map of electrical kind of borders in England, and the B6 one pretty much crosses where Scotland and England meet. So it has to be above that point. That's really where the big constraint issue is. And I said, right, what if we don't get them to turn off? We just find a way to use this power. And what we'll do is we won't give it away, but we'll make it really, really cheap. But only for people who can locate here, and only for people who can operate on some kind of flexible basis.
Yeah.
And that's where this new thing, demand for constraints, the DFC market, came from. And to be honest, it's not quite there yet. It was supposed to be there by now. In fact, there was supposed to be an auction for those contracts this quarter. So that hasn't happened. It's been moved back again. But we're getting there. And Renewablox will be involved with bidding for those contracts. And we'll be putting some assets in various locations in Scotland.
So in very simple layman's terms, because that's what I am, is that just a case of there will be some power that you can buy and you're just putting in a bid for what price per kilowatt hour? So there's no guarantees of how many kilowatts you'll actually be able to buy, because it will depend on the grid and demand. But when there is surplus energy, you get first dibs to basically pay a fixed amount to get that energy and use it as you see fit, which obviously will be Bitcoin mining, right?
Yeah, I mean, if only if it was that logical, Gary. But energy markets don't quite work like that. No, we don't work on any logical basis whatsoever. And I've been slightly disingenuous here, but energy markets are incredibly complex, and they settle every 30 minutes. There's these big trading desks which manage supply and demand and try and predict what demand is. So there's future settlement periods you can buy, day ahead prices. Then there's about, I don't know how many different markets there are, but there's balancing mechanism, there's turn up, turn down capacity markets, DFC. I mean, it just goes on and on and on. And some of these are stackable with other markets as well, just to make it a bit more complicated. But to go back to your question, the way that this works is we will effectively present a case to NESO and say, right, we will bid for, say, 10 megawatts of power, right? So we will agree effectively to absorb 10 megawatts of power from whatever date that contract is. And they tend to be T+2 onwards. So 2 years' time, we need to be able to take that 10 megawatts. So they say, right, okay, that's great. So you've got to take that 10 megawatts on the terms that we set. All right. And you'll get this price, which is still not completely confirmed, but we know roughly we know it's going to be a good deal. We just don't know exactly yet because they've had to change it a couple of times. And there'll probably be some kind of retention payment to stay on the scheme as well. But our end of the deal is that we then have to say, right, well, we've got to go now to Scotland, various places that they need this power taken up. And we'll already kind of notice we've done a tour already of Scotland and seen various places, because we'll say to them, right, we're going to put it roughly here. And then we need to go and secure some land or whatever it is that we need to do, or co-locate or come up with some kind of deal. And we will put 10 megawatts of mining, maybe not in one place, but it will be there ready on standby to absorb that excess energy. And that's a kind of simplified version. The more complex version is we can also participate in other markets, turn up, turn down on various different times, because again, all of these are stackable. But we know we won't be running 100% of the time, but we know we can run it on advantageous terms.
Yeah, and you can turn off and on very, very quickly, like those gas facilities that you spoke about earlier, which
very important point. Very important point, Gary. Yeah, because it does give that flexibility. And this is why in certain other applications, we actually refer to one of the models we produce for clients as the peaker plant model, because where they're already producing power, say producing a much smaller amount, 500 kilowatts, we will say, right, we'll co-locate next to your CHP, your generator, and we'll take all the power free of charge from you, pay for the capex. There's normally a capex payback period, and we'll manage where that power goes. So during times when the grid is really desperate for power, prices obviously go up very quickly. So we'll switch from our Bitcoin miners to exporting that power. And then as that comes down again, we switch the miners back on again. And what that means is, from a grid perspective, it's great because you've got this kind of flexible supply position. So it's really, really useful for them because they can balance the grid that way. It's profitable for us. And the great thing is, because we set the parameters, it means we can hedge Bitcoin price against wholesale market price for energy. So now, as one goes down, we can switch the other one up and vice versa and change those parameters. So it's a really handy little concept, which did take a bit of a while to put together, but we've got that figured out now.
And presumably some of these contracts, is there a balance between how cheap you can get the electricity for versus how much you would have to pay on a long-term basis if you just put some solar panels up? Because obviously there's the capital investment required with solar, but given how expensive a kilowatt of electricity is, Is that how close are those numbers? Are there any instances where it would just be like even some of these deals that you might get just don't even get close to being commercially viable?
There's quite a few questions in there.
Sorry.
Yeah, that's right. No, it's great. I mean, I love the way you're thinking here. So, I mean, solar in some ways is kind of the holy grail, right? You just install it once and it's free power forever. Fantastic. But of course, you only get that free power a certain amount of time a day. And the other thing, of course, it's a big old curve. So then you've got a problem with powering up, powering down. How do you set the right level and so on and so forth. So if you actually do the maths on it, it's not terribly good. And it certainly isn't good enough on its own for mining. Now, there are actually a couple of small projects that we have, just little ones, 20, 40, 50 kilowatts, which are kind of solar based because the reality is there's nowhere else for the power to go. Can't use it anyway. So they've already paid for the capex for the solar stuff there. We'll say, fine, we'll just put a small little unit in there and it'll run when it runs. There's no cost to us for the power. And eventually we'll share the revenues once the capex repaid, which, in some cases could be a couple of years. You just don't know. So the other part of the question was the cost of power, right? And that is the big thing for miners. It's always about the power. So when we set up to do this, so some of the other projects I've been involved with around the world, they are simple PPAs, power purchase agreements. So you say, right, I'm going to pay you ideally, 3 or 4 cents a kilowatt if you can get it, or even lower if you're really good. And you always pay that for the power that you use, right? And then you've got a floor for your profitability for your Bitcoin price that you can mine at. Now, we knew here in the UK that was pretty much impossible because our wholesale prices were too high. So that was why we ended up looking for, where's the stranded power? Where is an asset that can't be used because it's just not economical to turn it on, or there is no grid connection? That's another common one. So that then just sent us on a mission to find all these different places. And that's what we've been doing. So for the vast majority of our projects, the power we get is actually free because it's not being used anyway. In some cases, just being burnt off on industrial heaters because we haven't got anywhere for it to go. So there's quite an easy discussion to have with an energy producer when that's the case. And then it's just a commercial deal. So then we say, right, we'll pay for it. You give us the power free. When the capex is repaid, we'll split it.
Yeah. And I suppose there are lots of different models that can work depending on the business, their interest or not in Bitcoin. If you can find someone who's interested in Bitcoin and has surplus power, then the conversation might be, well, I just want you to help me install a system of miners that I can then keep all the Bitcoin myself, versus the other extreme is I don't give a toss about Bitcoin, but I'm wasting too much energy. You just help find a solution and I don't really care what you do with it. But, just pay me 2p per kilowatt hour and I'll be happy kind of conversation. Is it currently more that latter kind of conversation, or do you find that you're either being approached by or you're trying to find ways to access Bitcoiners in businesses like that might be an easier in?
We touched on something quite interesting there. I mean, in terms of, I'll just quickly deal with the power question first. We don't pay for power, right?
Full stop.
So that's it, because we don't do PPAs. We always do some kind of revenue share, or we have done today. I mean, it would have to be something pretty special to look at some kind of PPA arrangement, because the reality is we don't need to, and it works out generally better for all parties actually to do it this way. And of course it's low risk for them. We do have one client actually who wants to pay for the assets, and it's quite a large project, that one. And that's a different arrangement. So we'll actually we'll be sort of, maintaining and optimizing it under an SLA effectively for a smaller hash rate share, which is fine, but that's what they want to do it that way. It's fine by us. But one of the things that you touched on, which again, not that many people have picked up, is this idea of how the clients receive their payment, and this whole conversation about Bitcoin. I mean, on our website, we do talk about Bitcoin, but really we talk about flexible data centers, because we learned pretty quickly that if you go and talk to these guys about Bitcoin, they think you're as mental as your mates do down the pub when you mention it. It's too difficult conversation to have. What is interesting is that once we're a little bit further down the line, and they get into a little bit more of the nitty gritty about it. Love the idea. I think that's great. Can have my energy used. Eventually I'll get some money back. Fantastic. And then, the Bitcoin thing comes in. What we've noticed is that quite a few of these asset owners are really quite interested in it, which we didn't expect. We'll be honest with you, we didn't expect that. And what we think now, our latest theory is because these guys deal with payback periods that are measured in years and years and years, particularly farm owners. They think in decades.
Yeah.
They really do. And the next generation, the generation after that. So once you get your head around that mindset, it makes complete sense, because they're looking at thinking Bitcoin's compound annual growth rate, even if it only does what Sailors later, was it 20% or something over the next 21 years, 21%, I think, over 21 years, then they're looking at that thinking, right, so I can acquire this using power that I'm producing anyway, and it's not costing me anymore.
Anyway. Yeah.
Wasting. Yeah, sorry, you're absolutely right to correct me there. Yeah, it's a much better way of putting it. And I can acquire this asset that I just leave somewhere safely. And in 10 years' time, theoretically, it should give me a good cushion. So in their mind, that is completely logical.
Yeah. Yeah.
And I find that really interesting.
Yeah, no, it really is. And I guess a lot of these companies aren't necessarily PLCs where they have to report their next quarterly earnings, if they're private businesses, or just for whatever reason, just have a longer time horizon and a low time preference, as it were, then they're already halfway there to being able to embrace Bitcoin, right? Because they don't need an immediate return, and they can see what it might be worth over the longer period. But presumably there is an option for some of these projects to just sell the Bitcoin, on the profit share. Again, I don't know what sort of, whether it's 50-50, 70-30, whatever, but whatever the profit share is, the business that you're working with have the option clearly to just say, we don't want to keep it. We just want the fiat.
Yeah. And we manage all of that in-house. From a purely selfish point of view, we as Renewablox, we want to keep the Bitcoin, right? So because we got other revenues from, for example, heat contracts, from, revenues from market trading and these other energy markets. The ideal scenario is that the Bitcoin comes in, we just keep it. And actually, we've got Cartwright now who are working with us in terms of liquidity provision and the treasury side. So that would be great. Now, that means we can pay, if we can, the client's kind of share. And it does tend to be 50-50 if we fronted the CapEx and got the CapEx back. There are other models, but that's definitely the most popular one, and because there's no risk at all to the client.
So does that mean, just for clarity on that, you say once we get the capital back, so say you've invested, say it's £100,000,
Mm-hmm.
and once you've got £100,000 worth of Bitcoin,
yep.
So once £100,000, is that adjusted for the price, or at the point that you mined it? Just to be
the way that we do it, it's a great question, right? Because that single point can lead to an enormous amount of discussions. How does that get accounted for? And we just use the same accounting system for whatever model we're using, which is at the end of the month, the Bitcoin that we've mined, the value of that is taken at that point. So sometimes it works in our favor, sometimes it works in the client's favor. There are other models. There's lots of different things we've looked at, but to be honest with you, that's the simplest, easiest solution, and that can be replicated. And once that number exceeds or matches the CapEx, then revenue share starts. Quite often what we'll do is we'll calculate what we think the worst case scenario is and put in the contract, this is your maximum. So whatever happens after this point, we'll revenue share, because we just think that's fair and transparent for the client.
Okay.
And that's on us, because we got to get our maths right. So
Yeah,
if we've got that wrong, we have to pay for that.
So if I play that back, then you've got the potential on a 50-50 share, even after the CapEx has been paid back, if the client wants that paid in cash, not in Bitcoin, you've got the facility to pay them, but effectively you're effectively dollar cost averaging that, because you're paying them in the fiat from other revenue streams, but keeping the Bitcoin for yourself on the treasury.
Exactly right. Yeah. And that forms part of the treasury company. And in fact, it's an interesting one. The whole treasury company thing is a fascinating area, because as I say to people, we're effectively a Bitcoin treasury company by default. That's kind of our natural state, is that we hold the Bitcoin and we just get the fiat whenever we need it, kind of thing. And this is quite an interesting twist on the same treasury company idea. So that's quite early stage. It has appealed to certain investors, that's for sure, and certainly attracted some attention. It's yet to play out really in practice, but of course, a whole team of Bitcoiners, and we have really strong advice network. So we're going to really lock into this and make sure we get this exactly right, because ultimately we want to retain as much as possible for our investors.
Yeah, of course. The other thing, surely, that the Bitcoin miners aren't cheap to buy as well, right? Now, I know this is a how long is a piece of string type question, but if you could conceptualize of an average project, accepting that the level of energy you may get from that project is going to be quite variable, what would be an expected average length of payback to pay for the capex that you'd have to invest into that project?
Yeah, these are great questions. It is a difficult one to answer because, and this was actually one of the reasons why it was so difficult to model, because of course, when you're putting like last year when we were putting all our business plans together, if you've got a company who makes widgets and you know what your margins are, all you got to do is forecast what you think your sales are going to be, right? It's easy. Now try do it where every single project is completely different, right? And has all kinds of different outputs and models. It gets really complicated, and it took us quite a long time to work it out. So this is a kind of long-winded way of saying, okay, what's the typical payback time? I can give you a range. I mean, you could be looking at as low as 8 months, maybe as high as 2+ years. It's possible.
Okay, that's interesting, because I thought it would have been a minimum of 1 or 2 years and maybe up to 4 or 5. So that's really
Yeah.
interesting that it could be as short as 8 months.
It could be, yeah. I mean, it depends. You need something very particular for that. And there's only one example I could think of which could go as short as that. And that's generally when you've got really good uptime and there's plenty of power and might be some other reason why something else is going on there. So, because in some cases, don't forget, part of the model is you can, and this is also where it gets complicated, because with the same amount of power, you can spend a vast amount of money on the really latest gem miners and get much faster amounts of Bitcoin in. But of course, your capex is massive, right? So the other part of that is, there are a lot of miners, particularly around at the moment with this kind of rotation of some of the big miners into AI. There's miners you can pick up almost for nothing, really. And then you can, in fact, you don't even need to service them. You can really pretty much treat them as disposable. And just swap them out. I mean, particularly air-cooled miners, which we don't tend to use, but if they don't cost anything, you might as well put them in even temporarily. So, but then
is that a kind of cost per terahash type measure? So you
it
might get
is
the latest and greatest, but
exactly
the payback's going to be a lot longer.
Yeah, exactly. But then with something which is almost free, okay, you don't get as much Bitcoin, but it can disproportionately affect the payback period. So everything is, like you said, the start is all how long is a piece of string. Well, at the end of the day, you pay your money, you take your choice here on, and you try and match it to what the client expectations are. So it's complicated.
There's space constraints as well. So I was just going to say, are there some projects that have space constraints, i.e. you've only got a certain amount of warehouse space to put miners in or whatever it may be, and actually if you went for the cheapest models you'd have so many of them? Is that a thing? Is that a factor or not really?
To be honest, no, but only because, I mean, again, it's an excellent question, because you're right. With cheap miners, you'd need 5-10 times as many, and plus they'd probably be air cooled, so that's very noisy. And you've got a whole different set of issues with maintenance there as well. So it's not an ideal situation. That said, a lot of the energy producers that we're dealing with, and again, we're talking kind of on the private, privately owned operations assets here, they tend to be on farms, and farms tend to have a lot of outbuildings, have a lot of room, and certainly it's quite easy to rock up and put a container in place. That's no problem. But most of them generally have some kind of operating area which is of good enough quality to just install.
That's interesting. So there's lots of variables, but that's quite impressive that in maybe 8 months to a couple of years, that's paid back all of the capital. The other area I wanted to explore was, again, conceptually, this feels like it could be a massive opportunity, is heat generation, and quite how so many, whether it's warehouses or just the amount of industrial, commercial warehouses, whatever it may be, that require heating,
Mm-hmm.
where obviously the byproduct of Bitcoin mining is heat. So is that something that's, again, a really big opportunity for the business, and how's that shaping up?
Yeah, absolutely right, Gary. And one thing that people don't realize, obviously miners produce heat, but the ratio is almost 1-to-1. It's not quite, because there's a little bit lost for efficiency and laws of physics and all that. But yeah, so if you've got 1 megawatt of mining, you've got almost 1 megawatt of heat. So that's fantastic. Now, in some cases, you simply can't use it, right? So some of these projects, heat's there, it's not going to be used because it can't be applied. There are a couple of kind of farm type environments where it can be redirected to dry wood pellets, logs, that kind of stuff. So it's kind of useful. But there is a huge opportunity, because there is a lot of pressure for businesses to decarbonize, get away from gas. The figures show, I think the government's own figures, I forget which department it came from now, but they are published figures, which show the cost to UK businesses expect to be something like £50 billion to make this transition. And a lot of businesses can't really afford, I mean, obviously not in total, but in total, individually, I think the average cost is something like 80,000, if I recall. Now, businesses can't really afford to do this. And the other problem is electricity's still pretty expensive. So even once you've got rid of the gas, then you've just created another problem. So yeah, this is something we have been looking into. We do have a couple of projects of interest along those lines. One in particular in London, which is to do with the district heating system. 4 gas boilers there, all coming to end of life. And they don't really know what to do with it. But they just so happen to have, by complete chance, a lovely big empty room next to the plant room, which is just so happens to be big enough to house a couple of megawatts of mining equipment. Now, there are some other issues there, because there's the grid overhead and other factors that are involved. So we can't just go in and dump it, because it'll trip out the whole neighborhood. But there is a phased approach that we can do, and we can start then taking those gas boilers offline step by step as we ramp up. So that's a great example, and that is a heat contract. So in that particular case, we get paid for the heat that we generate. There's thermal storage as well, so that means we can participate in some of the energy markets, turn up, turn down, particularly turn down, which is important in that area, and of course participate in the wholesale markets as well. So you put all of that together, and you end up with a really nice looking economic model and a business which is partly decarbonised. It's a district heating system, so it's partly decarbonised. So you're right.
Is the biggest issue just competing on the price per kilowatt hour with gas versus electric? Is that the fundamental issue that is the hardest one to overcome?
Yeah.
I went to Bitcoin Prague 2025 and I absolutely loved it. It's back again. If you're looking at going, use code GaryBTC at checkout for 10% off your tickets.
Yeah, it's kind of called the Spark Gap, and it's quite big in the UK. So if you think about it logically, I mean, I don't know if you've got gas and electricity at home heating.
Yeah,
so I'm dual fuel as well, right? So and the trouble is, you tend to look at the headline, don't you? So you think, oh, my electricity, my price per kilowatt hour is, I mean, I've got solar, so I ignore it mostly, but I think it's 33 pence or something like that. And that's incredibly high. And then you look at gas and that's like 7 pence. You think, oh, that must be a lot cheaper. But obviously it's calculated in a slightly different way. So the thing is, if you've really got gas boilers and you're importing gas, you're paying quite a lot for that gas. So logically, it should be cheaper. You think, I'll get rid of all of that, and now I'll just run off this electric is better for the world, and all that kind of stuff. So when you do the maths, you think it's not that much better, or it may not even be better, and there's also all the issues of getting the power to that location, grid upgrades. Some of these take years. None of this is simple, and it should be. and it should be really cost effective, and it's not always. So we can come in and in some cases make a significant difference.
Is there any opportunity for replacing heaters in commercial environments? Can you foresee there'd ever be a scenario where you could go to a company that has a warehouse that has heaters that are coming to the end of their useful life, where you might say to them, okay, here's the deal. We'll give you free heaters, or we'll give you a subsidized heater and we'll run the maintenance contract on it. And all we ask is that they're turned on for X hours a day, which you're doing anyway. And effectively you can mine off that. But to the user, to your point, they're 95, 98% efficient anyway. So all of the cost is the same. It's just that you could mine Bitcoin off it. Or is the capital investment just far too much for that sort of thing right now?
That is an excellent question, Gary, and you've spotted something that we are very aware of. And yes, we are already very actively exploring this, and actually at quite an advanced stage with a couple of potential projects. But yes, you're exactly right. So let's just do the domestic one first. So yes, there are these mines. I actually have one at home as well, and it just runs all the time. Just takes the edge off one of the rooms. It's great. I don't even turn it off in summer actually, because I just like the sounds coming in. But I have to open the window. But in terms of what you said, you're exactly right. So what we've also learned, particularly with sort of small, medium businesses. So a good example would be like a tropical fish shop.
Yeah.
Now, you may have noticed, I don't know if you've ever been in one, but they're pretty warm in there. Right. And there's a couple of ways you can heat those. One's either through the tanks, but actually most of them do it through some kind of air heating, which gradually over time penetrates the tank, keeps the temperature at the right level. So it's always about 26 plus in that room. And a lot of them don't, because that's their area. They know this stuff, right? They know fish. Don't ask me about fish. They'll all die instantly, right? But they don't really know about power. They just know it costs them a lot. So what we've discovered is quite a lot of these people, first of all, on terrible tariffs, because they just thought they just have to renew and that's what they pay. But actually we don't really get into the whole tariff thing. There's lots of companies that do that sort of thing. But we can certainly have a look and say, right, okay, first of all, there's something that could be done there. The second thing is some of these guys, because they don't have enough power, they use oil-fired heaters as well, which is terribly expensive and inefficient. And we can come and say, right, tell you what you do, get rid of all of this. We can just put in a simple system that will heat this, and it will cost you the same, but more likely less than it did before. Because we'll also do something with the tariff, and we can still energy trade even on a micro amount by aggregating with other assets in the background. And that gives it some more viability as well. And the deals there vary, because at the end of the day, what do the guys want? Just heat, and they want to pay less for the heat. And they don't want to pay for the upgrades or the maintenance. So we come and say, all right, here's the kit. We'll pay for it. We'll maintain it. We'll keep it at this temperature. We'll do this, we'll do that, and it will cost you less than it costs you now. So that's a great proposition. So in our case, because we've got all of those components in place, we'll stump up for the CapEx and we'll then run the operation. And our side of that is we keep the Bitcoin.
Yeah. Is your ambition over time that it becomes more financially viable for you as a business, for smaller and smaller and smaller businesses, and maybe even one day domestic could be something where Renewablox could get involved in, or is that too pie in the sky?
I mean, domestic is probably too small. And we can go quite small, but it really is designed for sort of more commercial style operations. And domestic is different. I mean, obviously that project, one of the projects I mentioned, the heat project, there's apartments on that network. But that's quite a few apartments, so it kind of makes sense. On an individual level, it's probably not something we would get involved with. And to be honest, I think, the home miners, and there's some great projects where people are doing some really cool stuff, putting their own systems together. I love all that. And there's nothing to stop anyone really doing that home. Well, obviously don't blow up your boiler system. Get professional advice. Don't just try and, jerry rig it in, because it's not going to work. But it's not our market. So we are, we can go down quite small, and we're quite happy to if it's a simple project. There are projects we can say, right, there's a self-contained 50 kilowatt unit we can put in. We can literally put it in, remotely control it, still energy trade it. And as long as that works with the client's requirements, then everyone's happy.
Well, your example of a tropical fish, shop, that's not a big business, is it? Or most of them won't be. So if once you've got, to use the Bitcoin phrase, proof of work of improving that situation for a tropical fish business, that can be replicated all over the country. I was going to say all over the country and beyond, but presumably, is it just UK the focus, or do
Yeah.
you have, there is no aims to look further afield or consider that right now?
Well, it's interesting because we do get contacted by operations all around the world. Even just last week, we were asked to look at a project literally on the other side of the world. It's great. We can offer a little bit help and advice, but our focus is the UK. I mean, there's enough opportunity here to keep us busy probably for decades. But eventually these problems will be fixed, but, probably will be decades. And there's so much power. I mean, it is vast, the numbers that we're talking about. So, we've got enough to do. And, we're all Brits as well. So we want to make a difference for the UK market. And if we can do it on a big enough scale, it's even feasible we could improve things for consumers' bills ultimately, because we pay for all this stuff.
Yeah, of course.
All those constraint costs, we pay for them. It's part of the reasons our bills are so high, right? So if we can do something there, or bring assets, we've got assets which aren't being used because they're stuck without grid constraints, behind grid constraints. So we can do stuff like that. That's all great for the UK economy,
Yeah, we certainly need the help. If Renewablox can give the UK economy a little bit of a blip, then a blip in the right direction, that is, not a blip that we've been seeing recently. Another question, which is probably a fairly obvious one, is there a difference between solo mining and pool mining, or is everything pool mined? How does that work?
Yeah, that's a good one, isn't it? Because I mean, my little heaters, of course, are set up for solo mining, because why the hell not? It's a bit of fun, right? But most of my mining that I do now is all through pools, and I think we'll do everything ultimately through Renewablox, through pools, just because we are a commercial operation. That gives you a degree of certainty. I mean, I've had great debates with people on pools and different models and solar mining, but just from a commercial perspective, we'll run through pools and do it that way. Who knows? Maybe we'll have one miner in every 100 just doing a solo bit for a laugh. But don't tell my
It's difficult, isn't it? Because if you're taking on all of the commitment and the costs of the capital up front, even if there was a potential client, a customer that said, insist that we solo mine, you could be sitting there for 5 years and never mine a block. In which case,
that's true. That would be a very different commercial agreement.
Yes,
that's all I would say to
that. Yeah. They'd certainly have to contribute towards the capital cost, I'm sure. But yeah,
that's one that hasn't come up yet, Gary. So let's not put the ideas in there, right? Because we're going to have that question now.
The other thing I was just going to explore briefly was around the hash rate. As much as it does, a bit like the price, it can be volatile. Not quite as volatile as the price, but again, you zoom out and it's just up and to the right. So does that give you kind of opportunity and kind of cost risk going forward as a business, or do you not really see it that way?
It's just a cost of being involved with the business and with the industry, I should say, of Bitcoin mining, because all miners know that this is the case. This is how it works. Now, interestingly, when we did all our modeling, again, this hugely complex process that we did, it took us actually a couple of months to really nail it down with the world's biggest, most complicated spreadsheet. We actually assumed that hash rate will continue to rise quite aggressively over the next few years. And then we just adjusted all our forecasts accordingly. We put Bitcoin price, again, there's several different cases for that, bear base and bull case. And it allowed us then to measure the returns against the possible returns, I should say, against these different models. Just isolating hash rate, we took the assumption that would be continued up and to the right, not quite as fast, because obviously the percentages can't be the same going forward. But we have seen, this is the first time I think since the China shutdown, which was, when was that? It was about 6-7 years ago. Can't even remember. It was a long time ago.
Yeah.
It was the first time we've seen a kind of real underlying shift where, some miners are rotating into AI because, in fiat terms, it pays better right now than mining. But it is a different model. And for them, it works because they're running on a PPA anyway. So they run nearly 100% uptime. In fact, you have to actually with an AI center. So because they're running on a PPA, they can do this and the model makes sense. That's not what we do. So we will always be mining. We'll always be mining on free power, which is the advantage of us and the client. So there's always a layer of profitability. It just comes down to what do we think that profitability is actually going to be. So we may have been over aggressive with our estimates for hash rate growth because we did put it quite high.
I guess they're the two biggest drivers on the payback and the return, right? Is the higher the hash rate goes, if that's coinciding with the price falling, that's the worst case scenario, right? Because your miners are mining fewer sats that are worth less in fiat.
Yeah, and that balances out. Yeah, then the market will balance because marginal miners will say, there's no point me doing this, I'll turn off.
Yeah. There's always an element of relationship between the two, but it doesn't always. It's not a really strong correlation, is it? Because there are times when the hash rate is still growing even when the price falls and vice versa.
Yeah, I mean, this normally leads just to a period of adjustment because miners can sustain and quite often do go through periods where the numbers don't quite add up, but they've got enough reserve and they have a belief that this will happen or that will happen. But no miner is going to mine on a sustained basis where there is a loss, where it's actually cheaper and better just to buy the Bitcoin directly, particularly if they got flexibility over the PPA agreement.
Yeah.
And this is actually where a lot of miners have come unstuck in the past, where that price has gone wrong, gone against them, and then suddenly they're having to mine at a loss.
Yeah.
Because they're kind of forced to by contracts.
Your business model is completely different to that, isn't it? Because the whole point is it's stranded electricity that is being utilized. So it's not, you don't have the option of, well, the only alternative option, I guess, was the capex you're putting in to buy the kit. You could just have used that to buy Bitcoin, but then you're 100% exposed to Bitcoin price. Whereas actually you're buying an asset that's going to effectively give you a yield of Bitcoin over the useful life of that asset.
That's exactly
again,
it. Yeah.
If you're a Bitcoiner, you believe that the price over time is going to go up. Again, like you said, Saylor says 20% a year to 2020, 20 for 21 years or whatever it is. It's a very interesting business model. It's been great talking through with you and throwing a few sticky questions your way. It's been really enjoyed it.
Yeah, I have to say, Gary, I mean, I've been doing obviously quite a lot of podcasts recently, and I've always done quite a few anyway. You come up with some real good, cracking questions there. So I really appreciate the fact that you've clearly done a bit of research and thought about this a bit. So it was really nice to answer some questions which I don't normally get asked. So no, I really appreciate that.
Good, great. There is a round open, isn't there? So if people are interested in, well, either just finding out more about the business, but I think between my questions and your excellent answers, they've probably got quite a good feel for what the business is all about. But do you want to just give a quick overview if anyone is interested in investing, how they might go about that?
Yeah, we do, because I mean, obviously, a lot of I've been saying a lot of this stuff with absolute authority. This is happening, and that's because we've been around, actually, as I say, mostly under the radar for 3 years, building this thing in the background, and that meant lots of travel around the country. I don't know how much time I've been in all the Scottish airports, but it's quite a lot, and driving around the beautiful Scottish Highlands, of course, visiting sites here in the UK. So we spent 3 years putting all this together. That's myself, my co-CEO Callum Wheeler, and our CTO Tom French. And this is why we're able to, even now in what is an advanced seed round, be able to talk about this, because we do have a hell of a lot of projects which are now absolutely ready to go, and some of these are covered in our deck. And we're now gone to market really just to lock in the funding that's needed. So that round is now open. It's a £750,000 raise. We do have some of that already committed, I'm pleased to say, but that round's going to be open for another few weeks yet. The best thing to do is go to our website, which is renewablox.com. There is a big button at the top of the screen that says invest. That just takes you to our investor portal. And inside that portal, which you have to register for, unfortunately, this is an FCA requirement. It's not us making you do it. It's the FCA. So have to follow the rules. And inside there is our full deck and breakdown and just a simple form. So yes, I'd like to invest, and off you go. Yeah, it's as simple as that. It's as simple as we can make the process with the FCA part of it anyway.
Yeah, and if people want to kind of reach out to you online, or where's the best places for them to find you?
Yeah, well, I'm always on Twitter. The easiest way to go, my DMs are open on Twitter, so just drop me a line or just message me directly on Twitter. I'm generally there, so please do. Obviously, you can look me up at LinkedIn as well, or any of the Renewablox social media. Yeah, we all pick these up. So yeah, please do get in touch and just throw any questions you have at us. We'll happily answer them. Also, by the way, check out our events page, which we've just recently added actually to the Renewablox website, but we're doing a lot of events over the next few weeks and months, particularly with Bitcoin Business Network, the BBN. Those guys have been very supportive with helping us, and they're doing some absolutely incredible work. Half of it hasn't even been revealed yet, but I'm telling you, it's just incredible what they've been doing here in the UK. So you've got to check those guys out and what they are. If you're not following those guys, you should be following those guys.
Yeah, they're good.
Little movers and shakers.
Okay, well, the last question I ask all my guests is, what's one belief you held before Bitcoin that you've completely changed your mind about?
Saving money for the future. Obviously, without Bitcoin, I was at least aware on some level. I mean, I'm kind of an economist anyway, so I knew this, but I hadn't really applied it to myself. So I knew that I couldn't keep my money in cash, right? I always knew that. So I was always thinking property, other assets, probably property, because my dad was in property and all that kind of stuff. Bitcoin came along, totally turned all that on its head. So property, I'm not interested, really not interested. So it is now all about Bitcoin and securing my family's future and legacy through that route. So if you put me on the spot, which you have done, I think that's probably the best answer I can come up with, because I had to really think back there for a second to think how it was before. And it was, I remember now, it was all about securing future through property.
Yeah. Great. Jason, thanks so much. I've genuinely, I say this most of the time, but I really, really mean I've found this a fascinating conversation. And thanks for fielding some of my newbie questions about this. Thanks again for being on.
Yeah, thank you, Gary. I mean, I think we ended up going on for much longer than we thought, because it was just a really interesting chat. So, yeah, great, really well put together. Absolute pleasure talking to Gary, and I'll see you at the next event.
Great, thanks, Jason. Speak to you soon. Cheers.